section which is seeing a bit of pain. In spotlight will be the food delivery space, as Bank of America has downgraded and trimmed their targets for both Zomato and Swiggy, both seeing a bit of that pain in the opening ticks. Mahima joining us to tell us why.
Right. So, Taman, as you rightly mentioned, Bank of America has downgraded Zomato to neutral from a buy rating, has cut target price to 250 from 300. Swiggy, they have downgraded to underperform from buy and cut target price to 325 from 420. Now, there are a couple of reasons as to why they have done this. First one being that they're saying that the quick commerce overall picture, there has been prolonged competition and they are expecting higher losses going forward because of the dark store addition overall. In terms of medium-term prospect, they remain positive, but overall picture in terms of competition is getting tougher. Food, they're not, in the food delivery space, they're not seeing any material slowdown, but overall cash flow is set to sink is what they're expecting. And lastly, in terms of changing narrative in a risk-aver market overall right now, they are cutting their overall earnings estimates as well for both of these counters, and these are the reasons, the specific reasons as to why they have downgraded both Zomato as well as Swiggy.
Rated both Swiggy and Zomato. I think the key line for me over here is change in narrative, and the change in narrative, though, of course, is a bigger story. Milan on charts. I don't know if you'll have too much data for Swiggy, but at least for Zomato.
Yeah, Zomato is in a secondary downtrend, a corrective downtrend, I will call it, and it needs to watch its behavior vis-a-vis the levels of 200 to 202. And if those levels get violated, then it could be in some bit more of pain in near future.
Okay, so let's talk about a few other opportunities that we're seeing. We've not spoken about pharma so far. Milan, are you staying clear of the space till the dust settles? And I'm talking about fundamental factors here, of course, but how would you treat the overall healthcare space? Any opportunities there?
Yes, I would. There are certain sectoral opportunities here, and I see that the pharma sector, by and large, is in the bottoming out process. The secondary retracement that it was in, it's now about to end, and I see overall pharma space in general with the leading names like Cipla, Lupin, Divi's Lab, Dr. Reddy's, etc. May do quite well, but I would stay away from the second-run pharma stocks.
Okay. Okay, I'm just wondering whether there are any opportunities in the infrastructure space as well, broadly, because a few of these names have seen corrective moves, and then there has been buying interest as well. Any opportunities you're seeing here?
I will stick to the large cap area, large cap space. I would stick to L&T here and not go anywhere else. I will not be looking at the broader market space in this sector.